Why are investors dumping gold for Bitcoin? A perplexing query. Isn't gold, a time-tested safe haven for centuries, is being overshadowed by a digital asset barely a decade old? Sounds like a risky gamble on the surface, doesn't it? However, a closer examination reveals a logical progression. Let's start with the fact Bitcoin is often analogized as digital gold. It mirrors many properties of gold: scarcity, fungibility, divisibility, and transportability. Yet, Bitcoin has some trump cards that gold doesn't possess. It can be transferred almost instantly, anywhere in the world, and it's far easier to store. Plus, a recent landmark event has further spurred the rise of Bitcoin as a replacement for gold: the approval of the Bitcoin Exchange Traded Fund, ETF. This has not only added legitimacy to Bitcoin, but also opened up an easy avenue for institutional investors, thus contributing to its allure over traditional precious metals like gold. Furthermore, as we witness the world becoming increasingly digitized, people are carrying out more transactions online. This digital revolution has also led to the evolution of assets, with the advent of digital currencies like Bitcoin. The recent approval of the Bitcoin ETF is a testament to its growing acceptance. Unsurprisingly, investors find themselves drawn towards Bitcoin, often preferring it over traditional assets like gold. This shift is more than just a trend, it's an adaptation to the continuously changing times. Additionally, Bitcoin has demonstrated remarkable yields. Although gold has been a steadfast store of value, it doesn't provide the same growth potential that Bitcoin does. Recently, the approval of Bitcoin ETFs has further boosted Bitcoin's growth potential. This development allows for easier access to Bitcoin investments, broadening its allure to a wider range of investors. For those in pursuit of high returns, Bitcoin, now supplemented by the convenience and accessibility of ETFs, has become a more compelling option. But perhaps the most compelling reason is the current economic climate. With governments around the world printing money to stimulate their economies, there are fears of inflation. Bitcoin, with its capped supply, is seen as a hedge against this. Notably, the recent approval of the Bitcoin ETF has reinforced this perspective, as it signifies a level of institutional recognition and acceptance of Bitcoin as an asset class. So, in essence, investors are switching from gold to Bitcoin because it's digital, easily transferable and storable, has high growth potential. And now with ETF approval, it is increasingly acknowledged as a hedge against inflation. Gold might have been the go-to safe haven in the past, but with these new developments, Bitcoin is quickly taking its place. So, the next time someone inquires why investors are pivoting from gold to Bitcoin, you'll have the answer. It's not because they're rolling the dice, but rather they're acclimatizing to the transformative digital age. The recent approval of Bitcoin ETFs plays a critical role in this shift, marking a milestone in the acceptance of digital currencies by financial institutions. Investors are on the hunt for growth and safeguard against inflation, and at present, Bitcoin provides these in a manner that gold simply cannot match. Bitcoin holds the golden key to our future of finance.